license to kill off companies. Wow, 007. The accountants in the room, when you have clients that have got problems, send them to me and I'll try and sort them out and put them on the straight and narrow. Sometimes, obviously, that does cause a problem. How many people in here have had clients that have perhaps gone broke and they've been disqualified as acting as a director? A few? Okay. It's very, very painful, expensive, hurtful procedure to go through the courts. So I'd like to speak to you today a little bit about what does it mean, how it's going to affect them. Are they named, shamed, hung, drawn and quartered? What does it actually mean? Thank you. So, very easy to set up a limited company, go onto Companies House, buy one off the shelf. Formation of a limited company. You may be a hairdresser, you may be an engineer, whatever type of business you've got, set it up, but do they know how to run a limited company? Most of them don't, because then when you're chasing for the books and records, they perhaps give it to you in a carrier bag. It may not be on Sage or whatever type of accounting practice that they use. They perhaps have spoken to the bank manager because they need some money to set up the limited company. They perhaps haven't spoken to a solicitor because the solicitor will cost them money. They think, I don't need an accountant, that's going to cost me money. In hindsight, if they came to see you guys earlier, the accountants, you could then say, this is how you run a limited company, this is how I want you to do your books. At the end of the year when you do your accounts, it's very easy. But that doesn't happen in an ideal world at all, as we all know. The Directors' Disqualification Act, CDGA, more commonly known, only actually kicks into action, hence the bowling and the strike, when an insolvency event occurs. That means when I'm appointed, when they get compulsory wound up through the courts, and I'm only talking about limited companies here today, that's what about the disqualification. The insolvency practitioner, or IP, has got a statutory duty to actually complete a director's conduct report on all directors that held office within the last 3 years. 3 years back, some people, if there's a dodgy director, they perhaps go, well, let's resign before we put it into liquidation. I won't then come up on the radar, I'll skim underneath. That doesn't happen. If they've held office within 3 years, they will have a report done on them. That also includes shadow directors, de facto directors and de jure directors as well. So 3 years we go back and we ask them normally to complete a questionnaire to get some information from them. So as I've mentioned, CDGA 1986, I wouldn't ask any of you in the room to read it. It's an extremely boring, if you're not an insolvency practitioner, act to read. The report has to be submitted within 6 months of insolvency. It only applies if you're acting as a liquidator, if you're acting as an administrator in administration, and if you're acting as a receiver in a receivership. It doesn't matter whether you are voluntary or compulsory liquidation. It will either be the insolvency practitioner, or some of you may have heard of somebody called an official receiver. It's the government side of insolvency. I used to work for the insolvency unit many years ago. They're civil servants. They do a very different job to the commercial insolvency practitioners. What happens, first of all, on a voluntary liquidation, the insolvency practitioner does their report within 6 months. It is confidential, so we can't tell anybody at all what's in it. And we will then recommend whether or not that director should be disqualified. We recommend that is it. We don't do anything else. The knife is actually stuck into the director from the what used to be the Department of Trade and Industry. Okay, thank you. So what are the offences? What do your directors directors have to do to actually get struck off, so to speak. Criminal. If they do criminal activities, i.e. they may be falsifying the books and records of a company, that's way up the top, way up the top. They're going to go to prison as well for that if it's a criminal activity. Fraud. If they do anything fraudulent, and I'm going to come on to some examples in a little while. Wrongful trading. Yeah. Who's heard of the term trading whilst knowingly insolvent? Yeah, most of you have.
It's an old Romford expression.
Yeah. I think the way the economy is at the moment, most companies are struggling out there with cash flow, and it's very difficult. Are they trading whilst knowingly insolvent, or are they just having a bad time? This is when I would normally say to people, make sure to protect yourself from getting disqualified, keep notes. It may be that your cash flow is having problems because you're waiting for the next job, you're waiting for an order to come in. So cash flow is tight, but it's a very thin line. Are they trading whilst knowingly insolvent? Books and records, as Tony said. Yes, I've seen some delightful ones where they do bring it in a carrier bag, empty it out on my boardroom table and go, this is my books and records. Yeah, sound familiar? It would be lovely, make my job easier and your job easier if it was all scheduled and it was all neat and tidy, but it isn't. So if a company doesn't keep proper books and records, that's one of the things that actually they do get picked up on. Because how can you then investigate what's happened to the monies in a company if you haven't got the books and records? I do see sometimes, oh, it was on the computer, somebody actually went and tipped some water in the back of it accidentally, the books and records have been missed. They've had a fire in the offices because you haven't got the books and records. So they won't actually be accused of not having any, it's just that they haven't got any at the moment to give you. It does happen. Non-filing for, non-compliance for filing. Every limited company has to file their accounts and annual returns, as you all know. If they don't do that, that's another sort of like blip on the horizon that they can get disqualified for as well. Okay. It goes on. Trading to the detriment of creditors. Yeah, that happens a lot. Taking deposits. This is a real hot one actually, taking deposits. And the press pick up on it, and it will help with disqualification as well. If you have got a limited company, technically the law will say if you're taking deposits for goods, you should put it into a separate bank account or keep those monies earmarked so that you can't dip in and out. Doesn't happen, unfortunately. It's nice. But if deposits are taken...
Does that actually work though? If you have like a separate piggy bank,
yeah.
and unless that's the appropriate protections, the bank will just go and take that money.
Yeah, they will. Yeah, they'll offset it as well.
Offset it.
Yeah. But again, it would be nice. I'm talking ideal world here. We're not in an ideal world. It's the same with the at the bottom one, utilising Crown monies. What they actually do, they get their invoice paid. It's got the VAT at the bottom. It would be nice if they put that 20% into a separate bank account, so every 3 months when the VAT needs to be paid, they can just go, oh yeah, okay, here we go. Anyone got any clients like that? Not many. I love giving examples because then it's not me just standing here reading off a piece of paper. I did have a lady director coming to see me. She hadn't a clue of how to run a limited business. And she couldn't understand, she hadn't got an accountant, but she couldn't understand how the VAT had come about. So I flippantly said, on the table with her invoice, you do realise that little box at the bottom that's got, at the time it was 17.5%, is the VAT that you have to pay over on every single invoice. there looked blank. She actually thought that was her profit that she was making. I'll leave you to ponder on that one, because obviously she hadn't got a clue. She was making a loss on every single job that she entered into. I actually did say to her, you know, I will liquidate your company, but I'll tell you now, you may be facing a disqualification. And she said, I shouldn't be running a limited company because I haven't got a clue what I'm doing. Which was true. And as again, somebody like that, it's dangerous in business. If she had an accountant, the accountant would have realised about it, and it would have made her life a lot easier. So deposits, preferences. A lot of people that I see, the directors, want to pay their trade creditors. They'll say, yeah, but I like the meat man, I like the fish man. If it's a pub, club, restaurant, they want to pay those people. Technically, you're not allowed to do it underneath the Insolvency Act. You're treating somebody better than somebody else. It's an offence. They shouldn't be doing it. Sometimes you can do it if that person is threatening perhaps to send in the bailiffs. If they are about to hit you over the head with a hammer, you may say, well, under distress I had to actually pay them. But if you cherry pick who you want to pay, you can get into trouble for it. Transaction at undervalue. Sometimes when we go into a business to shut it down, they'll say, well, we've sold all the assets off before we pulled you in. So I'll say, well, what did you sell? How much did you sell it for? They'll actually say, well, yeah, we had a computer that was worth £1,000. I sold it to somebody for a tenner. That's an undervalue. But it does happen a lot because people will want to be clever and they'll go, well, we'll sell it all off because we know what's going to happen to it. Thank you. Recently, I have actually had the official receivers into my office. We had a hair transplant company up in London that went broke. They were taking loads of deposits off the people, not bothering to order the hair to put into people's heads. It was quite a lot of deposits as well. So I had actually recommended, I'm not looking around the audience, because everyone puts hats on. It was a recommendation because there were quite a lot of deposits taken by this limited company. In my mind, I don't think it's enough for the person to be disqualified about, but as I said, I've got a statutory duty to report anything that I think is underhand. And this is several hundreds of thousands of pounds of deposits that was just fraudulently taken. I had 2 officers turn up at my offices on Monday morning, planning to sit there all day in my boardroom. They'd already got their scanner in a briefcase, going through my files, scanning it. I don't think there's enough to disqualify, but they went, well, there's a hell of a lot of money that's been taken. Where has that money gone? We'll see. I then just take a back step, because it's then, if it is a disqualification, it's actually by the government and they will do it, but I can be cross-examined in court as well, and it's normally the High Court.
Can I ask a question?
Yes.
What takes precedence on that? Is it the volume of money or the quantum, or is it the principle that
It's
takes
the
precedence?
principle as well that starts off, but they'll then go on, have they kept proper books and records, and it's then literally, if you're playing a game of darts, how many things can they throw at the ball that will stick? And that's the reasoning behind it. They will literally go, ooh, deposits have been taken, nothing done with it, not put in a separate bank account, books and records, yeah. It will then be, have they been trading to the detriment? And it's how many things will actually stick, that whether or not it will actually be up the list. So, paying the price, yeah. Minimum disqualification 2 years, maximum 15. If directors don't want to go through the agony of being cross-examined in the High Court, which is extremely stressful, they can actually just say, okay, hands up, I did it, Guff, I'll give you an undertaking rather than take the fact of going through the courts and actually then being cross-examined. To be honest with you, if it gets to court, you're not normally going to walk away without a disqualification order, so you perhaps sometimes can just say, okay, I've got my hands up, I'm going to be disqualified for, and to a certain extent it is give and take, how much will you agree to, and you sometimes will get less of a disqualification sentence if you agree to it. It also helps, if you get disqualified, the director has to pay for the privilege as well. He has to pick up all of the court costs, the barrister's costs, so it can be really expensive. So sometimes an undertaking is better, and this is where some people will phone up and say, I've got a company, they're facing disqualification. Deb, can they come in and see you over a cup of coffee, chat? Can you speak to them over the phone just to let them know what's happening? So I am there sometimes just to give guidance to clients to say this is what's going to happen. You know, it's sometimes not worth fighting. Thank you. So how does it affect them? I'm hoping you've all got the slides in front of you. If not, I can email them to you. Apologies at the back, I may have run out. So how does it affect them? Well, they can't be a director. Some of you will say, well, that's fine. What they do, they put their wife in as a director because then it's somebody different. But if they can be seen to be acting as the shadow director means they're signing checks, they're making the decisions, they're doing the hiring, the firing, the buying, they're doing everything. So they shouldn't be acting as a director. They can't act as a receiver. They can't help in the promotion, formation or management of a company. So they can't actually help set it up. They're disqualified. And believe it or not, if you're an insolvency practitioner and you're facing a disqualification order, you lose your licence. Okay, so don't bend the rules, as I said. Criminal, definitely. They're personally liable. You can go to prison as well. On the personal liability side, that hurts because they may have been putting monies into the limited company to keep it afloat, so their director's loan account has gone up. They're not going to be able to get those monies back if it's gone into liquidation because they will be way down the bottom of the list with everybody else. And then they're faced with spending several £1,000s to pay for legal costs to actually try and fight it as well. So it hits their pocket, it hits where it hurts. To me, you know, someone's going to sit up and listen to you and say, you know, you may have been putting monies into your business to keep it afloat, but you're going to have to then pay some more money to try and fight a disqualification order. The hotline. There is a lot of people out there that aren't acting as a director and they're disqualified. Some of you may want to say, oh, let's check to see if this person, if it's a new client, have they been disqualified? There's a hotline number, so it's in your slides. Anybody can phone up and say, I think this person is a disqualified director and I am blowing the whistle. You know, you can do it with benefit fraud. This is the number that you phone with regards to reporting somebody for director's disqualification. You remain anonymous as well.
You've got to pay for it because it's no 8 number.
Yeah, it's so what happens? Again, it's on the public record, Companies House. You can check if somebody is disqualified. The Insolvency Service keep an eye on it as well, and the press. Sometimes you'll see in some of the nationals, they'll actually pick up on somebody that's been disqualified. It sells newspapers and magazines. It's quite interesting. You know, I always have a look and go, oh, okay, what have they done? It's quite interesting. Okay, next one. I love Tony, you beat me to it.
Then I left it around.
Wine. Who likes wine? I love wine. I wasn't an empty bottle. This is the root of all evil. There is lots of companies at the moment that get disqualified when they're in the wine trade. Why, I hear you say?
Why?
Not that they drink it and then they can't actually understand what they're doing. An example, Wine Traders International Limited. It's not one that DCA dealt with, thank goodness, but it is an interesting case that I thought I'd speak to you about. The director, I won't name him at the moment, got a disqualification for the maximum time of 15 years. Takes some doing actually, 15 years. Usually it's 2 to 5. So 15, you know they've done something pretty naughty. Name. The reason why I can't name him is what name do I use? He had several. He had several names, he kept changing it so no one would catch up with him, and he had aliases as well, so what do you call him? He was already disqualified in 2006, but did that stop him? No, bloody well didn't. He literally went, oh, I'm untouchable, I'll carry on again. So he was already disqualified, and he carried on again, hence perhaps the 15 years. He failed to supply customers with the wine that they had ordered. So again, he'd taken in the money, yeah, pro forma invoice saying okay, not pro forma, sorry. He'd taken in the monies, but he then hadn't actually delivered the monies. He hadn't even bought them. Now here we're talking a lot of wine, and I love drinking wine, but I think I would struggle with drinking this amount of wine. Customers had sold, well, the company had sold £9 million worth of wine. In your head you're just thinking, that's quite a big container load. £9 million worth of wine, but he only purchased just over 2 million. So 7 million quid. Yeah. It's not as though he drank the wine himself because he hadn't actually bought it, but he'd actually sold that amount of wine. He made fictitious entries in the company's records to try and cover his tail. Not a good idea when you've got somebody to try and change things around. He failed to maintain and preserve and deliver up the company's books and records. So that was why it came up on the radar about the books and records. This is nicely worded, and I'll say it slowly. He wrongly removed a motor vehicle which was on hire purchase. In other words, he nicked it. It's an interesting case. It does go over several pages, but it is very good. If anyone wants further details, let me know. It's a bit of a wine thing. I must have been sitting at home thinking, all the wines ones jumped out at me. Fine Wine Vintners, they got 12 years. GU Wines Limited, they got another 12 years. Moving off of wine, thank you. Gold Trail Travel Limited. As an insolvency practitioner, it is horrible dealing with a company that's in the travel industry. I hate it. My staff hate it because your reception, your phone is bombarded with people saying, how do I get home if they're stuck abroad? Am I going to have my holiday next week? What happens? It's easy if their companies are APTA registered, but if they're not, to an insolvency practitioner, it is a nightmare. This one here, Gold Trail Travel, gross mismanagement of the company's affairs. That's why they were actually disqualified. That sounds a bit woolly to me. Doesn't really tell you what they've done. So the company crashed in July 2010. It had debts of over 2.3 million. That's not really a lot for a big travel company, 2.3 million, I hear you say. But they left 23,000 holidaymakers stranded abroad. They were actually abroad, didn't know how the hell they were going to get home. I don't mind if I'm out there in the sun and I can't get home. It's worse when you're sitting at Gatwick Airport and the company has just gone into administration or liquidation. They also had apart from the £23,000 that was stuck abroad, they had 110,000 people that were waiting to go on their holidays. And we all work hard, we look forward to our holidays. I don't know if anyone's ever gone through that experience, but it's horrible. It's horrible for my staff actually phoning up people to say, sorry, you've lost your money, you may not get it back, and you're not going to have your holiday either. Not very nice at all. So the director breached his duty to the company. £3.9 million he paid to airlines as part. It's quite tricky, really. There was two complex and secret share services. It wasn't legitimate at all. He was siphoning money off, putting it into Turkish companies that his family had abroad. Money laundering, again, he was just literally siphoning money out, so people were actually paying for their holidays, because you all pay for your holidays before you have them, paid it into the company. He was then thinking, well, I'm not going to bother flying those out, let's siphon monies out, we'll put it in Turkish companies, no one can touch it. Yes, he was called lots of things by lots of people, to be honest with you. Okay, he didn't have supporting invoices on that one, no paperwork, he wasn't regulated by the CAA, so he was actually flying people illegally, he didn't have it all, didn't have proper insurances, you name it, he did it. Yeah, flying customers, you're not licensed to carry, that's not good at all. So, I'm just going to go back. Disqualification, it doesn't happen that often. Sometimes I'll see a glaringly case and I'll go, okay, they should be disqualified, and the directors don't, because perhaps there's not enough evidence for it. But they are looking for criminal, wrongful, trading whilst knowingly insolvent, not proper books and records, not filing accounts on time, trading to the detriment of creditors, transaction at undervalue, preferences, there's lots. So before I wrap up, so what can clients do to protect themselves? Obviously take advice from their accountants. It is very difficult if you're the company accountant, because if you're owed money, they perhaps won't speak to you. Or they think, if I come and see you with my books and records, I'm going to get a bill at the end of it, and I can't afford it. And again, I do feel very sorry, because not that as the agent to the company that you're ever going to get involved in disqualification, because it's only if you hold office as a director, but you can actually be pulled into those directors' disqualification proceedings in court, and they then actually can say, can I have your files, your books and records, please? I want to see your working files. And you do have to deliver those up. So directors should take advice early on. If they've got financial problems, take advice. And if anyone is facing, any of your clients are in the unfortunate position that they're facing disqualification, we do sometimes act to give advice to people on how is the best way to try and minimise the damage. It will actually need a solicitor if they want somebody to go to court. I'm not going to go to court and hold their hand with them at all. I know what's going to happen, and some of the times I would actually say, take the undertaking, don't go through the courts. It's horrible. It really is horrible. So, thank you all for listening. I think that's me just about time.